So welcome back to the channel, guys. In this video, we're taking a look at my altcoin picks for the month of March. Gonna drop some alpha on these three projects we're looking at today, and also a bit of a market update here, starting with BTC. If you do enjoy the content, make sure you like and subscribe to the channel. So here is the picture with Bitcoin. We've just gone and tested the midpoint of the range at around 45 to 46,000 bucks. We weren't able to break the previous high of the range here, set back on the 10th of February at around 45,700 and change. We come up, spiked near, but not quite there. And now we're starting to see a bit of a pullback. And this is an area that has been targeted as a place where we could perform a bit of a pullback, a retrace towards before continuing on upwards. This was part of Eric Crown's BTC analysis earlier this morning, and I do take what he has to say in high regard. So this is an area we've been looking for. We've just dipped into this, and just prior to this stream, I have made a few little additions, starting to nibble with some cash that has been on hand here. Also, further to this, we need to look down here. So this white line actually denotes an area of quite a lot of liquidity for BTC. So on high block, you can see where the pools of liquidity lie on the main exchanges, and around 39.6k there was a lot of liquidity there. So potentially we could see a wick down to that region as the market makers come take up that liquidity before reversing and sending prices higher once more. The bias at the moment looks a little bit more bullish than bearish, but definitely on wait and see mode and really not deploying too much capital into the markets. But as I say, just averaging in, taking little nibbles here and there as things are coming down. In terms of on-chain data, we're seeing a huge number of Bitcoin addresses with over 1,000 BTC, a 5% spike in wallets of this size that you can see on the chart here, a nice jump up, which coincided with the time that Russia has started to be banned from banking infrastructure. So this could be directly a cause of that, but it could also be individuals realizing they need to take full custody of their funds and maybe starting to see how the world's shaping up. Things don't look too rosy in terms of keeping your money in banks. Imagine just for your own nationality having your access restricted to funds. So BTC in particular, a road out here. Then we have this from Raoul Pal. He's almost calling a bit of a bottom within this Twitter thread. This moment in crypto feels a lot like March of 2020. Back then we threw the worst possible news at it, pandemic, global shutdown, and it fell very sharply but failed to make a new low. Back then, BTC turned up 10 days before the NDX, but bonds led cryptocurrency. And he says, cut to today, 8% inflation, oil at $105 plus, 7 hikes priced in for the Fed, plus quantitative tightening, with GS calling for 11 hikes and a war, but crypto failed to make new lows. Time to watch carefully. Yes, this is a different time, but price is suggesting that macro might get more positive for cryptocurrency. So he's kind of calling a bottom or near a bottom region right now. And this just gives me a little bit more confidence to really DCA into this market, maybe a little bit more aggressively on these dips that we're seeing right now, as what worse things can actually happen at this point. We've got war, we've got all the worst case scenarios from the Fed already affected the markets. It does seem like we've been hit from absolutely every angle here. Then in terms of the Fed policy, Bitcoin takes a bull breather, says CoinDesk, as markets price out prospects of a 50 basis point Fed rate hike later this month. So that is around the 15th, 16th of March, the next FOMC meeting. And the market is now pricing in a 25 basis points hike, not a 50 basis points hike, which a lot of people saw as a shoe-in prior to this whole war escalation. So we could see the macro easing up a little bit here for crypto, and thus we could continue with this bullish trend that we've had over the past few weeks. But that's pretty much it for the background to the whole market dynamics right now. Let's jump into some altcoin news. But first and foremost, we do have a word from today's sponsor, crypto.com. Please do make sure you check out the link down below. Get yourself one of these debit cards and start getting some of your spending habits onto this, and that way you get a nice bit of cash back in the form of crypto. I do this with a load of subscription services now, and so it just means my spending habits are DCing into crypto. Let's roll the ad. Today's video sponsor is crypto.com. I utilize this app almost every day. I use it as my fiat off and on ramp. You can simply purchase with a debit or credit card, or even better, complete a bank transfer for absolutely free. You can also use their in-app staking service, the Earn feature, to earn a passive income on your cryptocurrency. And make sure you check out their Visa debit card. I utilize this for 2% cashback on my purchases, and I also get a full rebate on my Spotify subscription. You can sign up via the link down below in the pinned comment and utilize my referral code cryptotube, all one word, for a nice bonus. So our first altcoin here that I am very bullish on is Dao. The token is the ticker QI, and this one is essentially a CDP, collateralized debt position stablecoin lending protocol. This means you can lock in your crypto assets. Maybe you've got some spare Polygon, for example, you're not really putting it to work. Well, you could lock it into a CDP position and get some of their stablecoin MAI, which is pegged to $1 in return. So say at a 60% LTV, you deposit 10K's worth of Matic and you can get 6K's worth of stablecoins and then go and farm. Now, these guys are doing a lot of big things. We're going to go over just a few today. I am planning to do a full video on this very soon, maybe even tomorrow, so stay tuned for that. The market cap of this is just under $50 million. I think this is highly undervalued, and it's a bit of a money printer. It's got a nice few revenue streams, and if you stake the QI token, QI, you can get a share of those revenue sources. So you don't have to directly buy this crypto outright, you can come and farm it. I'm currently farming the MAI, their stablecoin, to USDC LP position here. So 2 stable coins, no impermanent loss, and this is churning out 11.4% APR in the QI token. So this is a way you can get your hands on it without spending any funds, just utilizing some stable assets. If we pop over to the vaults section over here, I haven't got any opened right now, but as mentioned, this is how you do create a vault and then take out some MAI stablecoins. So you still maintain exposure to your underlying asset, but then you unlock the potential with some stablecoins. You'll also be paid a kicker in the QI token on top, 1.58% APR on this, and then you can go ahead and farm with those stable assets. They've got some links to Celsius with the Celsius X DeFi platform, which is super interesting. The token MAI, the stable asset, if I just pull it up here on multi-chain, you can see it's integrated and has deep liquidity across almost all the blockchains that you would possibly want to use. Kronos, BNB, Gnosis, Phantom, Boba, Metis, Moonriver, Arbitrum, Cello, AVAX, and on and on. So this stablecoin is everywhere. So the farming possibilities with it are very extensive, and this is what makes me super bullish on it. But on top of this, they just had another update, governance proposal passed. QI stakers will get more weekly rewards. So as I say, it's a bit of a money producer. The DAO has approved distributing 50% of revenue from market operations. So now QI staking gives you access to these revenue streams, repayment of fees. So if you do take out a CDP position here, once you repay it to get your, say, Matic back, you just pay 0.5% of the total value in Matic. They also have deposit fees for the LP positions, market operations in general, which we'll jump into, and this is the new proposal, and also anchor fees. This is where you can swap between MAI and any other stablecoin on their platform and pay a 1% fee. So a load of revenue sources that get distributed back to stakers of the QI token. But recently, this was the newest one, distribute interest revenue to QI stakers. So that is the escrowed QI stakers, i.e. those who have staked their tokens for a period of time. So the DAO currently makes over 200K a week from interest revenue. That is quite a lot of money. That is over 800,000 per month. And seeing as it has a market cap of just $50 million, seems pretty undervalued in my mind. This revenue comes from seeding lending markets with MAI, and all interest revenue is denominated in MAI and stored in the Treasury's address. So this was passed with a 99% yes vote. And now this means an additional revenue source to the stakers. That would be 100 grand per week, 400K per month, finding its way into the pockets of those staking QI as QI. And I'm currently doing that and plan to increase my bag of this as I really want to go after revenue producing assets. As I mentioned, I'll do a deeper dive video on this very soon, so make sure you're subscribed for that. Next up here, we have Trader Joe, the DEX over on AVAX. Now this one is really intriguing to me. They've been just shipping a load of really cool products, and they're just making waves in the industry right now. Market cap $185 million, TVL of around 1.5 billion, a nice ratio down there. And if we just pull out the 90-day chart, you can see at around $1 is pretty much as low as it goes. Yes, when we had that dip back in January, went to around 70 cents. But I do think around $1 or just under $1 is a very good price point for this token. So one thing to mention, tomorrow on the 4th of March, Avalanche, the ecosystem token, has an unlock. I think it's in the region of like 9 million tokens come online. So there could be a bit of a dump action on AVAX, and this could negatively impact prices of AVAX-based altcoins. So I've got some funds at the ready to buy some Joe if we get a nasty dip tomorrow, which I'm hoping somewhere in the region of 90 cents or even lower would be super juicy. So a little bit of information there. What they've just done is gone live with S Joe over the last month. This is Stake Joe, and this gets you paid in stablecoins. So users can stake Joe into S Joe and share revenue generated by the platform, and the rewards are paid in stablecoins, USDC. So earn stablecoin rewards over time. You can harvest them anytime, similar to a yield farm. No fees to unstake from S Joe, but there is a deposit fee that scales up depending how many people have actually deposited into the S Joe contract. So the more that get involved, the higher the rate, but this deposit fee is paid in the Joe token and actually distributed to those who are staking S Joe. So if you've got a long-term time horizon with this one and you're happy to sit on your hands and stake for S Joe, even that deposit fee, if it was at 3%, you're going to make that back whilst other people enter the ecosystem. So this is a pretty epic token economic structure. I really do want to get paid in stablecoins as much as possible. So then you just have a number go up portfolio. S Joe, the new staking option, provides users with yield in USDC. The first payout of S Joe staking rewards was set to deploy on the 28th of Feb. All users must unstake their Joe from X Joe to get involved with S Joe here. If we just go down to this part, you can see Joe, stake it to S Joe, receive USDC, and you can get involved with just taking those rewards, buying up more Joe to increase this loop and have a really positive flywheel. So this does mean there's less sell pressure on Joe. People like to get paid in stable coins. If you are paying just in the Joe token, there is a lot of pressure on that token just to get dumped and dumped and dumped. And so I think this is a very smart way of doing stuff. And this kind of token economics design for me is the way things should be. And currently the APR is around 58% paid in stables. So of course you have to buy a non-pegged asset, the Joe token, but then you're receiving a pegged asset to the dollar in return. But if Joe was to maintain a price for the next 12 months at around $1, that means you'll be getting paid 57 cents for every $1 you invest into this token. So I will be getting involved with this tomorrow, and I'll be happy to report back on Trader Joe and how this goes. So make sure you're subscribed for that, folks. And then last but certainly not least, we have Kujira. This was one we covered just yesterday. Market cap is just $30 million, highly undervalued in my opinion. This allows you to bid on liquidations of anchor loans, and they have a very big update today. You can see price action wise, it shot up a lot as of late and heading into a bit of resistance here at around $1, previous level of support / resistance. And I'm hoping it can stabilize around this level, 75 cents. If it comes around here, I will continue to add even more to this one. Ticker is KUJI. This is on the Terra ecosystem. But as we get into in just a second, it's going cross chain. First things first, they have a change to their staking model. Previously, you would stake KUJI, and in return, you would receive more KUJI as a reward. But they've changed this up now. So you bond your KUJI, you receive SKUJI as a receipt token. But when you unbond it from the pool, you'll receive a share of the assets that get added to the pool. So this is essentially a revenue share protocol now. And those tokens underlying are B Luna, B ETH, AUST, and KUJI itself, plus any other B assets that come and could follow. The likes of Cosmos, Solana are all pending addition to Anchor. So this effectively allows you to, by staking the KUJI token, get a DCA position into Luna, Ethereum, and dollar stable coins. I'm sure that's pretty much the cornerstone of many portfolios out there. So for me, a bit of a no-brainer to stake. This is the platform. This is where you can actually bid on liquidations, and you could start doing some really nice arbitrage work on this. It's a really great platform, one I'm going to continue to use and show you videos on how to use yourself. The current protocol revenue pool has over $16.2 million within it. You can see my staked values in here. And if we just go down a little bit, you can see that out of 32 million tokens, 18 million are currently bonded. I think that's in the region like 55% plus of all circulating tokens have been staked for SKUJI. This is going to be good for token price appreciation the more that gets locked up. And as you're being paid out and getting a share of the protocol revenues, which are really good underlying assets, there's no real need to be unstaking and selling your KUJI. The incentive is to add more and more and more. So I like the flywheel behind this one. Now, this was the big announcement today. So this is native to Terra. However, they are going cross chain. So this was announced just a couple of hours ago by Karua's team. That is Akala on Kusama. So effectively, Kujira is going to be participating in the liquidation engine of Karua. And as they say, this is where Kujira will be battle tested in preparation for further integration onto the Akala network. The first of many steps to ensure that liquidated collateral everywhere ends up where it belongs, the hands of the community. And if you want a share of these liquidated assets over on Karua and Akala in the future, you need to be staking Kuji for SKuji. So again, seems like a bit of a no-brainer, and you can see the team is shipping and also expanding into more markets. The potential slice of the pie we could be getting involved with is going to be enormous. And this makes me super bullish on this protocol. Entering into the Polkadot ecosystem, which is widely still unknown, this means a lot of opportunity. And the likes of Akala, one of the most highly sought after parachains, has a huge following. I think like 250,000 Twitter followers or something ridiculous, and a massive community out in Asia. I'm sure this will be a very good thing for eyeballs on Kujira. And Karua and Akala are the DeFi chains of Kusama and Polkadot respectively. So you can imagine there could be a huge amount of liquidations that could take place on these networks. So go and check out my video I did yesterday on Kujira. I'll leave it just in the card above and at the end of this video for you guys, but I'm very bullish on that protocol too. So as we head into the weekend with Bitcoin sat around 42,700 bucks, there's a lot on the table here and a lot of high potential protocols in the industry that have really unique revenue share models. We've highlighted just 3 here today, and they're ones that I'm super bullish on. So if you want further updates on these, make sure you subscribe to the channel, guys. Drop me a comment down below. What did you like about this video? What did you dislike? Have a good weekend, and I'll see you again on Monday. Goodbye.